Hello everyone, welcome to our latest little education webinar. We're going to look at the rate of change indicator, or the price rate of change indicator. Call it what you will, or whatever you understand it to be. It's a momentum indicator. It's a bit of a leading indicator, to be honest, as far as indicators can be leading. Remember, they all need data to plot themselves. It works on, literally what it says, the rate of change between X periods ago to current period, and it's a very simple indicator. It can be a bit volatile, can whipsaw around a bit. Zero's the key thing. As with all oscillators, it pivots around the zero line. It's an unbounded one, so it can go as high as it feels and it can go as low as it feels. So if things are moving really, really quickly, either positive or negatively, we see a big peak in the rate of change indicator, the ROC, or the rate of change indicator. So I hope you're all well. Hope you've had a great weekend. It was quite nice and sunny here in London over the weekend. It's absolutely miserable this morning. It's damp and dark and dreary when I got up this morning, but it's a bit bright this afternoon. But anyway, let's crack on. Let's get the slides up and running. There's about, I think I've got about 10, I think, altogether here. But obviously, any questions you might have, either stick them in the box now if you're here live, or email us or contact us on our Discord group, and we're happy to help you, because, as I say all the time, if you're successful, we're successful, and we do really, really want you to be successful at this trading game, because that's what it is. It's a mindset, it's a game, and indicators are just a simple tool in your toolbox. Use it or don't use it. If it doesn't make sense to you, there's always been my mantra. There's hundreds, if not thousands, of technical indicators around there. So let's crack on. So I don't need about me. My really approach to trading and investing has always been keep probability on your side, keep it as simple as possible, because I'm a simple soul, and trade time frames, particularly if you're going to be trading rather than investing. Look at timeframes that fit your personality. Some people are cut out to be scalpers, others are not. Some people are cut out to just trade once or twice a day. Others want more price action. So find what works for you, and the most important thing is really know yourself. Do what's probable, keep it simple, and it's all in the numbers. It's all about risk management, success in trading. So today we're going to look at what the price rate of change indicator is, or the ROC, or the rate of change indicator. As I say, it's a leading indicator. It's a leading momentum indicator, right? And it's a leading indicator. It leads, or it should lead, price action. That's part of its popularity. As with any indicator, it's just what it says it is. It's just an indicator, so it has some benefits, has some key limitations as well. And we'll look at some different ways of approaching this, whether you're a scalper or whether you're a swing trader or an end of day investor. It's appropriate because it's literally doing that. Depending on the time frame you're trading, it's looking at the rate of change of the price action, as I said, now compared to what it was X number of periods ago. And depending on how you set that up, you'll see how it varies. The up and downness of the indicator, the zigzagness of the indicator, is dictated by that. And obviously, any questions you may have as we go on. So it's a non-bounded, limitless momentum indicator. What does that mean in English? Well, it just means it can go really, really high, or it can go really, really low. It's not bounded like you see with lots of oscillators between 0 and 1. So if it's over 80 or over 70, it's in a so-called overbought area. If it's under 20 or under 30 or whatever number you're using, with some indicators like the RSI, it's in an so-called oversold area, and it's likely to move up. Those probabilities are still the case. But really, it tracks the speed of a trend. i.e., is it going faster? Is it going slower? Or is it going the same? So it's really, how far, how fast, and has it gone too far, too fast, either up or down, price action. And this, what the ROC is trying to show is ahead of the actual price action itself. So it can be quite useful from that point of view. It measures the percentage change in price between the current price and the price of a certain number of periods away. Many trading software packages have the ROC, the rate of change now. Default, I think it's 12 on many platforms. I think TradingView has it as 9. I'm not quite sure, but you can obviously play with it. So basically, if you're looking at the rate of change on a daily time frame, it's counting obviously back to the last 12 days, and it counts, what's the percentage change 12 days ago compared to today, or compared to yesterday, if you imagine it that way around. If you're using it on a minute time frame, obviously how fast was it moving? Speed of the trend is faster, slower, or the same 12 minutes ago compared to now. Obviously, if you're going to use on a minute time frame, obviously the news of the day or any unexpected news can move that around quite significantly. So it's plotted against zero. A break of zero, either above or below, can be quite key. A simple way of implementing it when you're using it as a potential entry, potential exit. Upwards into the positive territory if prices are changing to the upside, moving down below zero if prices are changing to the downside. And remember, it's the rate of change, how quickly we're going in one of those directions. So you see the appeal of this thing. A bit like all oscillators, it moves. It can move quite quickly from positive to negative, and you can get some quite significant whipsaws on it as well. There's nothing perfect when it comes to technical indicators. It's the application of it in your particular approach and how much sort of sway you're going to apply to any particular indicator. So this is it. This is a screenshot from a simple chart. We got price action. We got to have a simple moving average on there here, and here we got the rate of change here plotted for comparing the 12th period compared to the current period. So as you can see here, trending down. As you can see here, it's an oscillator, so it's not, the price is moving down here, but in this period here between the two yellow lines, you can see that the big strong trend, there's no indication of the strength of the trend particularly here. It's sort of flattening out, but the price action actually moved down quite significantly. But what we can use it for here is as we go above and below the zero line, it's the change of the trend. So here we've been moving down, here we've been moving up, here we've been moving down, here we've been moving up. How does the rate of change help us with that? Well, as you can see here, as we start to move down, we went into the negative zone. As we started to move up, or halfway after we started to move up here, you can see here that was the bottom. Didn't catch the bottom, did it? Turned around, but here we start to move over the zero line. We happen to be over that moving average as well. So this moving average here, which happens to be the 21 EMA on this particular chart, is coinciding here on the daily time frame on this particular asset here, which happens to be sterling, pound against the dollar here on the daily time frame. And again here it's coinciding quite nicely, so that think that that syncs quite nicely. So it's something I might want to use at that sort of time frame if we have a trending market. So if we've got, as we can see here, moving down, moving up, moving down, moving up, we need volatility. That's what the rate of change is by its very nature, rate of change, and that's what it's counting. So you see here, so a break of the zero line, and you might want to buy there. How high is it going to go? Well, let's say it's unbounded. We don't know, but interestingly, at this point here, it got as high as it got at this point here. So it's not an absolute price action. So here we were at 130, whatever it was, 138 or something. Here at this peak, at this point here, we've only got to 136. So we may be looking to get out compared to what happened last time. And similarly down here at the bottom, you can see it's not exact, is it? So we turned here and rallied up. We got as the rate of change got as low as it did previously here. We're just looking back to the left again, but at this point again it turned up off there. But as the rate of change started to move up, the price action was still moving down, so we got a bit of divergence there, and we'll come up to that in a little while. But again, don't ever use any indicator all on its own without any other indicator. Here we've got a simple moving average with it as well. Here we've obviously got some big round numbers being hit here. 132 for a week or so. Couldn't get that. This big downtrend came to an end here and did turn around eventually at this big round number. And again, rate of change was starting to pick up a bit earlier than perhaps the price action did. But anyway, you can see how that's coincides. So it's relatively simple to understand, and it looks at the relationship between the two closing prices of the periods that we're looking at. Say typically 12 or 9 on TradingView, but some long-term investors use a higher number. They might move it up to 25 or 50, 100. I think some people use. Shorter-term traders might crash it down to sort of 5, 6, 7 sometimes. And the maths behind it is basically around the closing prices of the periods that you're looking for. So the 1st and the 12th, and that's one of its, we'll come to the drawbacks in a bit. That's one of the drawbacks of it. So it's the most closing price in the most recent period compared to the closing price of the whatever n happens to be before. So it's a bit arbitrary, if you like. I mean, it was first developed by a guy called Barat. I think it was somebody, I can't remember his first name, but Barats, I think it was, back in the 1940s. So it was a very early technical, and one of the very earlier technical analysis tools that came out. But it was a momentum indicator, and so there's obviously other momentum indicators as well. RSI is probably more popular. It doesn't take in account, for instance, rate of change doesn't take into account any sort of volume if you're trying to look at using it with stocks. But its simplicity has been one of its major appeals. That big new traders as well as more experienced traders have used over the years. So it's measuring this, are we getting faster? Are we getting slower? Basically, how far have we gone and how quickly could we go? So 7 key structures of it. So it's a leading indicator. So 0 means no momentum. So as we come to 0, means there's no momentum. Okay, so we want to be moving away. So once we're above the 0 line and it keeps rising, it shows that the trend is not only up, but the speed of the uptrend is accelerating. So once we're above 0, and it's the incline of the slope of the ROC is starting to move, that's the speed of the uptrend is moving. When we're above 0 but falling, it shows that the speed of the uptrend is slowing down. It doesn't mean that the trend is going to change. It just means that the trend has slowed down, or potentially, or is slowing down, or potentially going to slow down. When the rate of change above 0 and again starts rising across above the previous top, shows that the uptrend is very much increasing its speed. So we've had this sort of wave action. Let me just show you that on our chart here again. So here, so we've broken. That's not a good example here. We've broken the 0 line at this point here. We've rallied really strongly thereafter, although you could argue here we've been rallying from the floor here, haven't we? But this was the first attempt at 0 line here. You see that, how it sort of ran to where the price is now, isn't it? 137.20. It ran to some sort of resistance area there for 5, 6, 7 candles. That's why this dipped away from 0. It wasn't until this big engulfing candle here, or whenever this was, the 13th of October on this particular example, it's rallied through that, and then we followed through with a big degree of momentum. We then peak here during this day, and then the price rolls down. We keep going up, but the price starts to roll down, and the ROC has already rolled over, or starting to roll over as well. So we're running out of momentum. Price starts to go down, and we don't go into 0 until we come back this big down candle here again by whenever this is, the beginning or end of the month, and a big down candle here, and then we also happen to break the moving average the following day, and also break 0 the following day, as we then start to move down. And you see how steep that rate of decline is compared to this smoother rally here, simply because the candle pattern, the bodies of the candles are much, much bigger. We had a very, very big down day here, another big down day here, and so the steepness of the move has continued. But you can see what I was saying before, and what we were saying on the slides there, it's the low at this point and the low at this point of the momentum. Remember, this is measuring momentum, and the speed of the trend has ran out. Now we've had a retrace, and then we've price action has continued to decline as the rate of change is actually moving up. So there's a bit of diversion there. We'll come to the divergence in a minute. Okay, so that's sorry, that's our structure of the rate of change. So conversely, when we're below zero, as we've just been showing there, the line is falling and the downtrend is increasing its speed, so the potential downside is increasing. But when we're below zero, we flatten out or start to rise, means the rate of change is slowing down. So we've might have moved too far too fast. If the rate of change below zero starts falling, so we've had this move up and then down again, it means the speed may be increasing again. So it is very much a flow momentum type indicator, and you ideally, and most of the time, you're in sync with the price action or ahead of the price action. That's one of its big benefits. One of the key benefits is not just its simplicity, i.e., if we're above zero, you want to be looking to go long. If we're below zero, you want to be going short. The key thing is that the rate of change should peak before the price action, so it's a leading momentum indicator. Again, there's no concept of overbought or oversold really with the rate of change. We've just got these high areas, and again, it shouldn't really be used on its own. You can use it along with another momentum indicator. You can use it with a trend lines. We can use it, as we saw on that previous chart, and we'll have a look at some live charts in a minute. An EMA, I'm just using the 21 here. It happens to be the one I like to use more, but again, you could tweak that if you want closer to price action. Obviously, the lower the numbers, either with the ROC or the other indicator that you're using with it, perhaps the potential of more volatility and more failed false signals you can get as well. So we'll come to the drawbacks in a minute. But if we just look at, just go back. Actually, let's see if I can. Actually, we'll bring up we'll go through the slides and then we'll bring up some live charts as well. And we'll show it in live rather than just going back to this fixed one here. So as you can see here, we've, as I said at the beginning, we've had this, 4 significant legs down, up, down, big down one, this third one, and then we're recovering here. There, as you can see, the ROC is more or less in sync. As we go down, we go up, and we go down here. This is where it starts to fall apart a wee bit, and it's gets the rally here, and it tops, saying it's topping here, but the price action still keeps going. So we've got this divergence going on here. You can see the rate of change is still rising here as the price action comes down. So again, it is front running the move up, but as you can see, the first test is sort of as the price action gets to the moving average here as well. So although it is front running, as you can see, that's moving up as the price action is going down. So we've got this divergence. It's a while before that actually takes place. So how helpful this would have been in this particular application, trying to catch that divergence is quite, I would argue, it's question. And the simple break of the zero line is been a bit more successful in this case, as we've gone back in tandem. We're now synced with price action and the rate of change increasing as the candle prices, as the candle size increases, as this big rally breaks out. Again, the rate of change slows or tops here, and you see it's rolled over. We don't know what's going to go on, what happened after this in January 2022, this particular action, but I'll bring some live charts up in a minute. So it's simple, it's easy to understand, and it is a bit of a leading indicator compared to some. So what are the drawbacks? Well, it is some say too simple, because all it's doing is giving counting. The count back is key, so it's giving equal weighting here to the previous price, whether it's 10, 12, 20 periods ago, and the recent price. So despite trying to predict future prices, it's still saying, you know, the difference that these two arbitrary numbers are equally weighted. It can be quite, you know, whipsaw, as I've said already. You know, it can jump around a bit, but so can all oscillators by their very nature. That's what they are, aren't they? They're trying to measure extremes. Because it's unbounded, though, you know, it can keep going. So there's no indicator, there's no you know, suggestion on the chart of when we're in an overbought or oversold zone. But what you do that in that case is use previous situations on the time frame that you're trading, or you can use, as with lots of other technical analysis, you use perhaps two readings of the ROC to give you a sort of a filter in that. We'll have a look at that in a minute. And the divergences, you know, as we've just seen, can sometimes give false signals. So you might need some other indicators to help you with that, like we've just seen on that slide there, where it looked like the price action was moving down, the ROC was moving up, front running the move, but it was a bit too early, wasn't it, before, and it was the moving average that finally confirmed the breakout. So again, using a combination of indicators usually helps. The problem is using too many indicators can often confuse. So again, find what works for you, have a play with it, and see, as I say, what works for you. To be honest, these are just some examples from my old screenshots. These are different assets are on the daily. They're all on the daily time frame. Here we got a you know, a very strong move. That's the happens to be the pound Oz. You can see it's strong convergent move. Here we got again a strong front running one here. Here on the sterling. I think it's at the same time. No, yeah, it's just the same. Yes, the same one we just looked at. Here, this is Bitcoin. Is that 50,000? Yeah, $50,000 there. Key $50,000 here. This is again from 2022. But you know that it's under a moving average. What's the rate of change? Well, it's, you know, it's falling here. We got these lows here. This sort of, that was that low consent, but the price action is all the way down there. It's not really helping a great deal there. It's helped with that big down candle. There's, it's gone under. That's not zero, that's 0.36, so it hasn't really helped with that one. Here, bit more useful here. This is a Swiss yen. We've been sort of in a congestion zone. The rate of change has been moving up quite nicely. We break the zero line a few times. The final one is around about here, but there's not a lot of price action, is there? So, you know, certainly by this candle here, this big breakout candle we've got here, the rate of change is starting to move. So that's quite interesting. We rally into a big high number up here, wherever it happens to be, and then we come over quite quickly on this big bodied candle to the upside. So it's suggesting that it may have run out of steam and it's topped and it's turned over quite quickly. So we've run down and come back quite quickly. But again, that's all happened in the space of a few days. So, you know, not a great one on that one. This is a good, I like this one here, this flat top here on the rate of change here on the euro, again showing you this congestion zone. So biased sort of to the upside with this support line here. Flat top, not really going anywhere. Price action not going anywhere. So we're really sort of channel bound and not a lot of action really as a trending indicator. So the strength of the trend, as you can see here, as it's whipping around on this one here, the euro one, as it's whipping around zero, not really of much use. Whereas if you look at this pound yen one here, nice strong up move as the price actions continue to move up. So again, as we've got into this top here, or this first top here, the rate of change moved down quite quickly, so that might give you a first heads up. You can see what it's sort of front running the price action. So price action has gone down and the rate of change moved down really quite quickly, and then it's legged down again, but the price action has moved back up. So we've got a bit of divergence again. So this looks like we may, you know, the fall after this could be quite significant, is what this is suggesting we've got here. Okay, so lots of examples. It's a very straightforward indicator, and again, I would suggest we use a simple moving average with it. So how far, how fast, has it gone too high, has it gone too far too quickly? Rate of change by its very nature, and it's really it's that straightforward. Many compare it to the sorry, let's just come out of that and let me just bring in the live. Where's the live charts gone? Oops, that's my meerkats. I must have closed my charts down. Right, let me just open. Just bear with me a second. Just log in, and we'll look at some live charts for us. Right, there we are. So let me just go. I set up the demo positions. So the demo layout was this morning. So here we are. Let me just take the volumes off this for now. Actually, I'll leave the volumes on because it's relevant. Okay, so this is the daily. This is the rate of change. This is set to the default I've always used typically, which is 12 here on the daily time frame. But let's just go down to this. I know a lot of you are scalpers, so let's just go down to the sort of 5-minute time frame, which is what we were playing with this morning. So yeah. So okay. It's been set for the okay, so we can see this is our zero line here, the grey dotted line, and there's not been a great deal of direction, has there? Since we started, we've had this big move. Let me just. It's not displaying that properly. There we are. That's better. That's better. Yeah. So obviously got stuck at the daily time frame. Okay, so that's a wee bit better, isn't it? So this is pound yen on the 5-minute time frame with our rate of change and our volumes actually marked on here as well. So major move. Well, let's just go back here. So this morning during the Asian session, start of Monday morning, pound yen, not a great deal going on. We'd had some weaker than expected deflationary, relatively deflationary data out of China this morning, not really impacting sterling or the yen, and so we've had a bit of a no mover here. So we slipped down here on open. That was our low. We went here at 1:30 this morning. So not a great deal going on in the Asian session, sideways action. We started to move lower. So we'd been caught, short, long, not really a lot happening there with our moving average change. There was a move here. The last big move was here. So if we were taking these, we would have been stopped out. So, and this one would have been a successful one finally, as it's moved lower here around about 7 o'clock my time, as really the London traders, Frankfurt traders are all getting back into their desks to start the new week. So sterling's been sold off for about an hour or so, and we went all the way down here. And what I wanted to show you was that trend was with us. So we were, that's a short position. Then we've got this low of the day. So using this going forward, that was our low in the early Monday morning trades for pound yen. So we had this low down here, and then some action round about 9 o'clock. We started to pick up again. So we'd gone into this 189.50 area. We'd rallied a wee bit, and then we'd put in a high here, which was coinciding with the high of the day as far as the there we are through here for this particular indicator is concerned. So that an area might come back to. This is our low of the day for this indicator, and again we've come back to test both these extremes in the last hour or so as action has picked up. But as far as price action is concerned, we're still chopping around. So it's a good example of the vulnerability of this indicator when it's chopping around zero. As you can see here, that we did have a decent move earlier, and that sort of coincided with this move into this low area. Then the indicators actually rallied really strongly in about 20 minutes time, and then it was similar again, coinciding with the price action. But since then, it's chopped around again, so it hasn't got as high as the extreme that we got to earlier, but it has got back to the low again. So what happened was, again, so we've had some buying down at these lows again. So if we'd seen this earlier this morning, we might have looked to perhaps try and see if we could catch the bottom of that. However, what you'd want to do is say, well, what is this completely directionless, this particular pair? It looks it here on this 5-minute time frame, doesn't it? So if we go up to the higher time frame, what's happening last week? Well, it's a bit choppy, wasn't it, really? This is last week, price action wise. About if we got to the 4-hour time frame, wow, yeah, again, quite directionless. And here on the 4-hour time, under the moving average, okay, so it's sort of biased to the downside. That's a bit more of direction, isn't it, on the longer time frame. The 1-hour time frame, yeah, sort of. It's been, yeah. Where's this take us back to? This is the 6th of March, so we've been sort of negative through Thursday and Friday for this pair. Price took us all the way back here earlier last week at 188.65. So 4 hours sort of bias low, the 1 hour's bias low. So today, shorter time frames, you want to be like, if you're really going to take things, you want to be taking the short trades, and that's the big move we've had today. So the bias, even in this 5-minute, is to the downside. So these up moves haven't played out. If we've moved lower again, and interestingly here, see, we had a low here this morning at 89.50, and we've gone to 189.34 in the last half an hour or so. So is this uptick really going to play out? We're looking to take the short position. So we'd had that nice short position there, would have been okay. We're under, then it turned around really quickly. So not really very useful there. Big candle there, but we'd move, perhaps catch some of that move down, but it not getting pulled in to take that long, given that it's against the trend. Okay, if we applying it that way, if we look at a different asset, if we look at the DAX, similar thing here on the 5-minute time frame, quite volatile around the zero line. Obviously 8 o'clock here, you see the volume pick up, and the volume, interestingly, again, a bit like the pound yen here for the stocks, sideways action in the Asian session, not a lot going on. But the bias was to the downside. Again, if we go up to the higher time frame, we know that what a terrible close. This is this morning, but it's a weak last week, wasn't it? So on a short-term basis, we're looking to take short positions. So that one's been a nice successful one here on the open. Down here, ROC here has turned around. It's gone positive here. That didn't work out, did it? So again, bias to the downside. So shorting that, sort of shorting that, and again down. I mean, as far as the rate of change is concerned, the interesting thing we would say that today is that the recent low here was significantly higher than the previous low here. But look at that, it was through an area where we'd been last week as well here in the shorter time frames here at minus 0.8. We got into and we rallied off that again. So that's quite a support area, you would argue, on this particular setting, on this particular asset, on this particular time frame. And that's how you have to play these. Let me just put that on there. These assets. Okay, so the exception was this big low here, and it was bought back, wasn't it? So, but as far as the price action is concerned, we've continued to go lower. So there's been some support through these when the rate of change has spiked. Obviously, that was at open, this one here, this morning, and then we went test it, and we went the actual indicator went much lower, and this one hasn't gone as low, but we're still biased short. So I'm not buying this. I'm still looking to be short on this position, but we'll see if it rolls around again. What I'd like to see, with this period, moving averages have it not breaking back under the 21. Want to change the moving average to get it a bit closer to the price action. Another setting could be, if we move this down to say 13, it gets it closer to the price action. So again, still biased to buys. Have we found a floor here on this one? Who knows? But again, I'd still be looking to be short on this one. But we might have had the low in. Obviously, this was an hour into the US trading session today. So rate of change is basically what it says. It's measuring the where's my chart? I've gone. It's measuring the rate of change. I've lost my slides now. There it is. Come back. Let's put the slideshow back on. So it's measuring speed of change. Have we gone too far too quickly? And are we going to? Is it going to help us recover from it? The limitation that the other key indicator is often this is run with and it remains more popular in the rate of change is the simple RSI or the MACD. If we again, sorry, if I just come out of that and come back to my charts, can't bring my charts back. Sorry, I'll just get around that. We'll come back to charts again. So I touched on this before, didn't I? So some ways of running it is to actually run it twice, or if we insert the RSI, a more popular momentum indicator. Again, this is a bounded one this time. Remember, it goes from 100 to a 0, and we've got our overbought and oversold areas here. See how they sort of coalesce. So this is our low here on the low, the price action on our rate of change indicator. Let me just make that a bit bigger. And it also that coincides with our RSI at 14. Also, significantly overbought here as far as the rate of change is concerned. So RSI would suggest going long here. Rate of change with the moving average, and not until this point here. I'm moving up here. You can see RSI not in an overbought zone. So all this, although these are high for the day, these areas, we've got our peaks in the momentum from the rate of change indicator. It's nothing like being in a considered as an overbought situation as far as the RSI is concerned. So that's back to the 50, so it's back to really no momentum. Whereas RSI, the rate of change is here. You could argue it's quite significantly above at 0.6 above the 0 line, isn't it? So again, there isn't a perfect indicator, my friends. Use the one that seems to make more sense to you. The other one that fits in this category is the MACD, which you get it's a bit of more of a laggy one than perhaps these two. But again, that's having not here. We see the MACD here, the signal and the MACD line not crossing until this point on this time frame. See, it's that point there. That sort of coincides with the it's as far as the RSI's. Take that off there. The RSI is still under 50, so it's still neutral. It ran up and then it's flattened out. The rate of change, the ROC, is much steeper, much more much more parabolic, isn't it? It's much steeper rise. It's a bit of a rate, so it's moved up, but it's, you know, from a movement point of view, it hasn't really moved very far, has it? It's flattened out. That's saying that's suggesting it's peaked here in the last few minutes. Here, if we're looking at that, you see that's peaked quite high relative to previous action. So again, that's looking like that's run out of steam. RSI's turned back under 50. Signal line still and MACD is still angled to the upside, but we've had a rollover in the MACD line here as well on this short-term time frame. So again, we're biased to the longer, higher time frame trend to the downside, and that would be, you know, perhaps another short position there on the DAX here. We're in line with the higher time frame trend. The RSI has moved from out of a neutral area into a negative area. You could argue it's gone down under 50, although the ROC has peaked higher than it has for the last since this morning. Really, up here it's run down again, so it's perhaps that moving down, and then across, you know, the laggers, using the MACD here on the 5-minute time frame, you know, having got in here, might be getting out here as this is crossing again, so it's suggesting more weakness to the downside there on the DAX. So again, use a combination of indicators when we're using these oscillators, trend lines, whatever it is you want to add to it. Volume comes into play as well, because that doesn't the ROC doesn't look at momentum volume at all. So there it is. It's quite simple. It's been around a long time. A few people are big fans of it. You know, so I've also seen people. If we just take these two off here, there's other ways of playing with it as well. Just take that out. Take the RSI off. But putting multiple versions of the obviously to sorry, remove. So if we put the ROC back on, but with a different indicator, so that you're running them concurrently. So there we got, say, the higher. Let's put this to say to 25, just as a, and you can see, you know, how the degrees of how far back here we are. So so we got two here. We got the night. So from now to, you know, 9 candles back here, 25 candles back. So 25 times 5 takes back to that sort of 2-hour time. So here, what's happening here? Well, we're both. This is the 25 is negative, and it's really been negative since here. So there we are. So this one, you know, we've been under the 0 line here on the 25 candle count back for most of this period, haven't we? For most of today, haven't we? We've been under. Where did we go under? Yeah. So this is 8 o'clock today. We've been negative, haven't we, all day? And that's in line with where the price action has continued to limp down. The shorter time frame has captured these peaks. So we got up here, and that might suggest we're going to move down. But the long higher time, interesting, we started to move up, wasn't it? But it was still very negative. So under. So this has sort of kept you on the right side. Obviously, the higher count back here is or comparison, not count back, is suggesting, you know, the big move earlier in today is still in play. with the big volumes at the start of the trading session, the trading week, is biasing us to the downside. So this is still, and again, this is minus 0.8 here currently on the 25 count back. The 9 count back is minus, has also gone negative again. So they're both in sync now, both under negative. So that again here might be another suggestion to take a short position. As we've gone back under the moving average as well, and there's a clear sort of bit of resistance in the last half an hour at 22,700 round number coming into play again. Area we'd been into earlier in the day. Higher resistance you can see there from the price action was a bit round about there, wasn't it? At 22,770. Is our higher to the higher resistance area. Yeah, that's some people use it like that. I don't know many people that use two rates of change together, but I know it's in some programming systems I've seen before as well. So there we go. That's the rate of change. It is quite a straightforward asset. And let me just leave you with my slides. So some books people have asked about, and these are some of my three favorite trading books of all time. If you haven't seen these before, do get them. If you only want to buy one of these, say buy the one in the middle, Trading the Zone, Mark Douglas's anthem on trading psychology, because that's really what makes the difference between winning and losing trades. Really is a mindset. Not these things we've been talking about today, to be honest, the indicators. It really is your application of risk management and understanding yourself and emotional control that keeps you in business for any length of time. So please visit our website for more information, thePropTrade.com. We've got promotions on all the time. We've relaunched our 15% discount for existing clients. We have, if you're new to us, there's a 25% discount off new. Let me just come up the slides again. Sorry. Come up the slides. Back to our platforms. So our challenges, as I say, are available to everybody and anybody. Come and have a go. Say very good value. If you're new to us, if you type in new 25 here in the coupon code, it gets you a 25% discount off our whole range of challenges. If you're an existing client and you're looking to open another account or additional account, you have as many goes as you want, you can put in GET, so get 15 will take 15% off these values. So if you're new, it's new 25 to get a discount off all of these prices. Say $25,000 account is now available for what's that? What was that right to write down the other day? Didn't I? $130, isn't it? This one, this 175, 50,000 comes in at 260. There's a lot of leverage there for you guys, as I say. And even if you've after a new account, if you're trading with us currently, get GET 15. I get you 15% off these prices here as well. So do come and join us. We're here to help, my friends. It's an interesting week. As far as the news is concerned, it's all about really Wednesday and the inflation data out of the US. We'll be live for that, see how that's moving the markets around. But that just leaves with where we were with the DAX. We were short here, weren't we? It's gone against us a wee bit at the moment, but the overall trend has been to the downside today for the stock markets. And our rate of change is suggesting that as well, isn't it, here on the line? So take care, see you soon, and see you tomorrow for more live analysis. All the best, everyone. Bye bye.